I'm here with Chinesom Ejiasa, Director of Opick, international U.S. agency that is one of the largest sponsors of private equity funds in emerging markets. Chinesom, let's start by asking you about Opick and about yourself, and tell us what Opick does and why is it in Africa and what's the interest of Opick in Africa.
Sure, thank you, Hany. So Opick is the U.S. government's development financial institution. We were established, as you said, in 1971. From a private equity standpoint, we've been investing in the private equity landscape since 1987. Our first transaction was actually an Africa-focused fund in 1987. We committed about $15 million to it. Since 1987, we've invested over $4.2 billion, committed over $4.2 billion to this space, to over 450 projects. From a general perspective, Opick has three mediums through which we actually deploy capital to this space. We have political risk insurance, we have structured finance, and then we have investment funds or private equity. Our entire portfolio is about $15 billion, $15 billion across the emerging market landscape. I myself have been with Opick since 2009 fall, so for about 3 years. Prior to that, I was in structured finance and mortgage-backed securities, and then also a short stint with the Standard & Poor's, with the S&P.
And my question to you is, how does Opick invest in funds, and what kind of strategies do you have for investing in funds, and how do you get in and get out?
I'll first start off with, if I may, with what I think, and then maybe even what Opick thinks, if I can be so kind as to think that Opick and I are on the same page. What Opick thinks in terms of the opportunities in Africa. And there's two themes, really. The first theme through which I think we think of the opportunities is the challenges in Africa, on the African continent. Infrastructure and food security. If you look at those two challenges, those two, if you flip the coin, you can realize that they're actually opportunities. From an infrastructure perspective, there's a huge deficit in terms of how much the governments across the African landscape spend on infrastructure and how much is actually needed, the demand for infrastructure. So there's a huge opportunity for private sector businesses, organizations, whether they be US, European, or even African companies, to come in and actually build the infrastructure out across Africa. And obviously that infrastructure play bodes well for other types of private investments, whether that be fast-moving consumer goods, telecoms, whatever it might be. You need the reliance of strong, dependable infrastructure. The other is food security. Food security not so much just in Africa, but also across the globe. Africa, as you probably well know, about 60% of the land in Africa is arable land. So the opportunities to actually go and invest from an agricultural standpoint is beneficial because it helps to sustain the food security issue or resolve the food security issue that exists on the African continent, but also the food security issue that I think will exist and persist for a while across the globe. The other theme, I think, is from the perspective of just the opportunities on the continent. There's many opportunities, but if you look at it from a more macroeconomic standpoint, you look at the growth population, the youth population on the African continent in each country, and what that opportunity means is that there's going to be a massive consumer population, and then there's also going to be huge urbanization of folks in the cities within the African countries that we, Opick, tends to invest in and that a lot of other investors tend to invest in. So that opens a lot of doors from an investment opportunity standpoint, from fast-moving consumer goods, telecom, mobile, financial services. So the opportunities play is a really good one, and we see that from the trends perspective. So from a challenges perspective and from a trends perspective, there's a massive amount of opportunity on the African continent. From Opick, the perspective that Opick has that we've kind of employed from a more company standpoint is, there's four themes really. The first theme is infrastructure, the second theme is SMEs, the third theme is agriculture, and the fourth theme is renewable resources. Those four themes give us some guidance in terms of the opportunities that we think exist, not just in Africa, but since we're focused on Africa for this discussion, the opportunities that we think exist on the African continent, and that's how we look to deploy our capital, through those four mediums.
And how does Opick invest in funds? So if a fund manager wants to get money from Opick, how do they approach Opick? What kind of financing do you provide, and what kind of conditions, or how do you deal with fund managers in this case?
It's a very good question. So we have a very, what we call, transparent and competitive process. What that means is essentially we have a call for proposals. And what that call for proposals means in layman's terms is Opick will come up with a strategy. Let's say that the strategy is infrastructure in Africa. We see that there's a huge challenge and therefore a huge opportunity for building out infrastructure in Africa. We'll devise a strategy and call that our call for proposals. It's an RFP, request for proposals. GPs who have that same focus and that same strategy for their funds will then submit an application to OPIC via our own website, and that publicity is basically born through our website, magazines, periodicals, and then also we employ a gatekeeper who also professes the strategy that OPIC is actually trying to employ over the course of the next year. GPs from across the globe will submit their PPMs, their pitches, their presentations, and we'll call through all of those presentations. We just had a call that closed earlier this year in January where we received about 158 proposals from a wide array of GPs who had very interesting and compelling strategies. And we make it a very competitive process by bringing on a gatekeeper who helps us call through all the data, have out a list of criteria that I think are pretty standard across the industry in terms of team cohesion, track record, strategy, thought through strategy, the ability to be a fiduciary for your LPs and for OPIC. So all of those kind of standard criteria we look for, and then there's some OPIC specific criteria that we look for. But we make sure that we measure every single GP on that same basic measurement scale so that it's very transparent and it's very competitive. That process can take anywhere from 6 months to 12 months in terms of submitting an actual application to actually getting a board approval for an actual commitment to the fund. And then thereafter, in terms of drawing down capital, it can take a little bit longer depending on the fundraising environment and the negotiation process between OPIC and the GP.
And what kind of issues do you face in the kind of, when you're dealing with fund managers and actually with co-investors in funds?
So it's a very good question. I think one of the primary issues that we face is, and I should have said this earlier, is the way in which we invest is through debt capital. And the way in which we invest in private equity funds, the way in which we invest in structured finance is all through debt capital. So one of the issues that we tend to have to manage quite often is the fact that our capital is debt capital, whereas the majority of other capital in private equity funds is pure equity capital. And so what we've taken upon ourselves to do is educate the community about the benefit actually of our capital and how it actually helps to improve returns, enhance returns, not just from an economical standpoint, although that's clear, it's the leverage effect, particularly in Africa where the growth play is quite clear and the opportunity to have outsized returns vis-a-vis public markets is quite clear. So the ability to actually leverage those returns via our capital is a benefit that I think the LPs, that inures to the LPs and also inures to the GP. So we've gone out on this long process of actually educating our counterparts in the LP space and the limited partner space about just how our product works. It's a very innocuous product from your conventional debt product in the sense that it's a non-amortizing loan. It matures at the end of the fund's life, so it accommodates the structures of a private equity fund. And it's very innocuous in terms of the profit-sharing component that's received on the back end. So we think very cautiously and very conservatively on how our capital is actually going to support the African landscape or the landscape, the emerging market landscape, but also our counterparts and our counterparts that are also investing alongside us in the market.
Thank you, Chinesom. It's very interesting to learn about OPIC and what OPIC is doing, especially in Africa.
Thank you very much.